Welcome back. You're watching The Money Show with me, Kavita Thapliyal. And before I move on to our discussion on small cap funds, let's talk about Reliance Jio's results. So Reliance Jio posted Q4 results today. Company's revenue jumped 2% quarter on quarter to 23,394 crore from 22,998 crores. Now net profit too rises to 2% while margins have remained unchanged. Revenue, PAT and EBITDA results were in line with the ET Now poll. So that's the number coming in from Reliance Jio, and later in the evening we'll be waiting for RIL's results, and you'll be having the best panel on ET Now for that. Okay, so we move on, and when it comes to investing in mutual funds, small cap funds as a category generally attracts a lot of interest from investors, and investors look to earn maximum profit from these funds even as it involves a higher risk. Today on the Money Show, we will analyze the top performing mutual funds from this category and understand how these funds have changed their strategies to mitigate risk and earn profits for their investors. Let's welcome on board Pankaj Tibrewal, Senior VP and Fund Manager, Equity, Kotak Mutual Fund, and Nirav Karkera, Head of Research at Fisdom. Hi, good evening, Nirav. We'll wait for Pankaj, but in the meantime, I really want to ask you a question that viewers all the time ask me and on the show. How much will we earn from a small cap fund? Kitna banega?
Like with most things in life, even the response to this is relative. So जितना अगर आपका horizon काफी लंबा है, so versus the large and mid cap counterparts, small caps have been known to deliver far more higher returns. So for going ahead, let's say in the medium term, अगर large cap के लिए expectations है around 10 to 12%, और उस पे एक थोड़ा सा kicker expect किया जाता है mid cap से to perform in the range of around 12 to 14%. I feel small cap should be pegged around in the range of 14 to 16% over the medium term period as a standard starting point.
So, well, we'll be understanding the fund managers aspect of this later on, but then I also want you to help us analyze the data of last 5 to 10 years. Obviously, we can't be looking at past returns when deciding to take a entry in a small cap fund. That's not how it works. But then over the years, I really want to understand how the category has evolved, how the fund have performed, just to understand the kind of volatility and the kind of cycles that a small cap category has gone. Because when you talk about mid caps and small cap, they work in a cycle. If they're rising, they really rise high. If they go down, they give you like negative returns. So over the 10 years period, if at all you have the data, could you talk about the funds and the returns that investors have got?
Yeah, so over the past 10 years, like you said, returns have been cyclical. There have been good years and there have been tough years for small caps as a segment holistically. Like, for instance, if you talk about calendar years in 2011, small cap funds as a category returned a negative 23%, but it was quick to be followed by almost, upwards of 35% in the next year. So it has been quite a volatile ride for the small cap category, and that's the nature of the beast. That's how these funds function. So if you look at a longer horizon or a longer period of returns for most of these funds, they will be in the mid to high teens on a CAGR basis for the last 10 years, especially the funds that have survived through the past 10 years. The returns have been volatile. If we were to talk about the top performing funds on a 10-year CAGR basis, right? And let's talk about the most, the best performing funds just 5 years back. Let's say in the year around 2018, the fund delivered around a negative of 16 to 18%, but 5 years just 4 years down the line from that starting point, it delivered a stellar 74%. I'm talking about Nippon India Small Cap Fund, which ranks on top of the table in terms of 10-year performance, right? So that is how volatile it has been for such a fund. For another fund, let's say probably one of the bottom performers, where 5 years back the calendar year return was in the range of negative 20%. In the same period, it generated, 4 years down the line, it generated a positive 60%. So this is the crest and the trough of the performance of the best and the bottom performers in the small cap small cap fund universe. If you see on an average, on an XIRR basis, the best fund delivered a 24% XIRR over the period of the last 10 years, and the worst performer probably delivered just around 14% XIRR, which is not bad by any return expectation standards, but this is the deviation. This is the gap. On an average, let's say you weren't lucky enough to pick the best or unlucky enough to pick the worst. On an average, the fund category delivered approximately 18 to 18 and a half sort of percent in terms of XIRR. So that's how investors benefited through the cycle.
All right, let's join in Pankaj Tibrewal also. Hi, Pankaj. Good evening and welcome to the show. And we are going to focus on small cap category. So, I want to understand the kind of liberty you have, in order to show your expertise and strategize when you are picking up small cap stock. Because as compared to what you do in a large cap fund, where you have like top large cap companies, blue chip companies to select from, I think small cap is a category where you have a comparatively freer hand and the kind of pool you have to select from. Talking about the current scenario in the market, what is that one thing that you are focusing on in terms of innovation and in terms of a different strategy in your small cap fund?
Hi, Kavita. I think the space is very exciting.
Right, it is.
And once
And
you
people
start,
also, I guess.
yeah, but once you start looking at a longer term picture, as India moves from a $3 trillion to $5 trillion economy, and your per capita GDP moves from $2,200 to say five to $6,000, what will happen is that there will be many new categories which will be created, whether it be home improvement, durables, infra, real estate, recreation, and so on and so forth. And a large number of them are represented by small caps and mid caps. If you take the top 100 stocks which are classified as large caps, 55 to 60% of their revenue are dollar denominated, or they derive their revenues from outside India. But when you look at the small cap and the mid cap space, and small cap is defined as 250th and below, so there's a large universe of stocks to choose from. A large part of them are domestic plays. So if you're bullish on India from a medium to long term, and you believe that this 3 trillion is moving to 5 and 7 over a period of time, this is the space you can't ignore, because a lot of businesses which will become larger in size will be smaller today in size. We saw that in the 80s and early 90s, that the IT bellwethers today were small caps in a way in sums of size, and later on became mid caps, and later on became large caps. So I believe that this sector is very exciting, but also with the caveat that it has its own volatility. And the person before me was telling you about the risk and the patience you need to have in this category, because there are periods which will show you negative returns also. And as investor, you get perturbed during those times. And if you are believing that you will get a quick buck, probably this segment will disappoint you. Also, the second most important point about this sector, where professional investors, money managers can add value with a good and a large team, is that if you look at the top 100 stocks, they are well discovered, well tracked by the research analyst. But as you move down the market cap curve, the number of research analysts covering that stock actually reduces. And below 250th market cap, there are companies where only one or two research analysts on the street covers that stock. So if your research team is good, they can do deep research, scuttlebutt analysis. I think you can add a lot of value over a period of time. But don't forget that the data is not very encouraging from a overall wealth creation perspective, in a sense that last 20 years, if you look at, only 5% of the small caps have been able to transform into large caps. And that's where the real money is made. So our strategy is that try and have filters where you can make less mistakes, because making less mistakes is the key to investing in small cap. The more mistakes you make, probably the lesser the returns would be. And in smaller caps, because they are smaller in size, you need to be extra careful with the management quality, with the return on capital, balance sheet, and cash flows. So our mantra is that it's a gorilla to King Kong strategy. have 50, 60 gorillas in your portfolio which pass your filter in terms of management quality, return on capital, balance sheet, and cash flows. And you don't know while investing which one will become King Kong. But if you are right on the investing side, making less mistakes, be rest assured that out of the 60, 70, few of them will become King Kong and add the returns to your portfolio over a period of time. And hence, you see over a 10-year CAGR, this category has not disappointed. And this category, even the last fund the previous speaker mentioned, has done better than Nifty in a way, or maybe equal to Nifty. So I think you need to have patience. You need to be uh, temperamentally okay seeing the troughs when 2018-19 happened, 2011 happened, 2013 happened. And there have been many instances like that. And if you are patient enough, you will be probably rewarded. And it's a good way to diversify your portfolios over a period of time. And if you're bullish in India, I again repeat, you can't ignore mid and small cap space.
Exactly. So now currently looking at the market condition and the uncertainty involved, how are you reading these companies? What are the sectors, Pankaj, that you really want to focus on?
So I think, Kavita, one mega trend which we are riding on is the entire manufacturing revival in the country. And over the last 1.5 years since COVID, we have been positive because structurally there are a lot of changes which have happened. One is the geopolitical order in the world has changed since COVID. A lot of companies, whether it be European based or US based, wants to diversify part of your supply chain across industries. And India is coming as a good location and destination for that. The second one is that the balance sheets of corporate India have deleveraged considerably. And as we speak, the debt to equity of the top 500 companies in India is down to 0.7. And third, the profitability of the companies have moved. There's been a shift from unorganized to organized. And these are structural changes I'm talking about. And hence, we believe that manufacturing revival is happening right in front of us. And a large part to play that manufacturing revival lies within the mid and small cap space, whether it be capital goods, whether it be consumables, which is used in production like abrasive bearings, whether it be consumer durables, whether it be chemicals, whether it be cement. A large part of that pack on manufacturing side is represented by mid and small cap. And I see a great opportunity over the next 3-5 years from that theme perspective. The second one, which we are positive on, is the entire revival of residential real estate. Again, that entire category is can be played only by small and mid caps, and we believe that bottom up stock picking is the key in this area. And in this space also, many home improvement companies, whether it be tiles, pipe, electronics, maybe plywood, all those things will lie in this theme as a part of the entire home revival. And I think there are other more themes like the entire pharma space, some of the mid and small cap IT companies, and auto ancillaries. And I think auto ancillaries is again a promising space. We have seen many companies move from small to mid over last 15, 20 years and become sizable in nature. And this is another one important part which can be played through small caps. So I think there are, various narratives, opportunities out there, 3-5 year perspective. But finally, it boils down to bottom-up selection, selecting the best businesses and management, which will compound your earnings and wealth over a period of time.
Nirav, how would you explain a case of over diversification of a small cap category in an investor's portfolio? Saying you have a small cap fund, then you also take a flexi cap and you also take a multi cap. Do you think this kind of a pattern in your portfolio is needed when you have a typical small cap fund, or it's important because the strategies could be different for all of these funds?
Yeah, so the amazing thing about the small cap category is that most funds, they take a very distinct approach in managing their fund. So within the category, the overlap is limited. But yes, if you're creating a portfolio and you include flexi caps and multi caps in the mix along with small cap funds, there's a high chance that you could probably have a higher overlap. And the cases are stronger if are buying these other category products from the same AMC, because there is a good chance that the universe that they filter out will sort of overlap in their flexi cap mandate as well as the small cap mandate. So there could be a case of over diversification. I feel the correct way to look at portfolio is at an aggregate level, and then looking at the exposures at an aggregate level. So if you take a small cap, flexi cap, and a multi cap fund, and you break it down to their underlying, their underlying market cap construct, that should give you a lot of visibility into what is the kind of portfolio you're holding, and any adjustments must be made in line of such a portfolio that you look at, after breaking down the portfolio, which is once constructed at an aggregate level. I hope that makes it slightly clear.
Exactly. With that, I think, Pankaj, one last question that I wanted to understand about a small cap category is your time horizon really needs to be long. I'm talking about a fund. And also, I mean, people want to invest in the stocks. That could be a different strategy altogether. But typically in a fund, if you're holding it for more than 5 years, do you also think that one needs to have an exit strategy? Because that's comparatively easier to understand for a large cap category. But what would be the criteria to decide on your exit in a particular small cap fund?
So I think time and again we have seen that the space goes through undervaluation and overvaluation. So if you have a limited horizon, time horizon, I think time whenever the earnings yield, and really people talk about earnings yield, and just for your viewers, earnings yield is nothing but 1 by PE. And whenever you see a very sharp compression in earnings yield between large caps and small caps, I think that is a great signal that small caps are overvalued. The second one, which we use as a contrarian signal, and it acts as a great sentimental signal, is the value 100 participation, Kavita. What it means is that when there is greed on the street, nobody wants to invest in large caps. Everybody wants mid, small, micro. And as a result, out of the total 100 rupee which is traded on exchange, only 50 to 55 rupees is traded in large cap. The rest is traded in mid and small caps. And the opposite is true when there's fear on the street. Everybody wants large cap stocks. Nobody wants to invest in mid and small cap. We have seen various time periods, especially the last one with COVID, where everybody wants to hide themselves in the large cap. And that ratio moves to 75-80%. We have seen that whenever there's fear, and 75-80% is the ratio of value 100 participation, investing in mid and small cap at that point of time is extremely rewarding. And the next 12 to 18 months, the kind of alpha which you make over Nifty is amazing. Opposite is again true when there's greed on the street and the ratio comes down to 50-55% and you invest at that point of time, the next 12 months is disappointing. So you need to see these market cycles when you need to take a call on exit or maybe look at aggressively investing in this category. I would again repeat that this category gives you great returns over a period of time, but you need to be patient and also make sure that when there is fear on the street, when everybody is hating mid and small caps, I think that's the real time to go and invest your capital. And we have seen time and again over the last 20 years how this segment could be rewarding for investors which have a longer term horizon. We have seen in our funds as well that, in 2018, 19, and then moving into COVID, the SIP returns for a 3-5 year had actually become negative. And how in 2 years the entire fortune changed. If you were impatient and you moved out during COVID, probably you didn't see that benefit coming in. So again, I say that this segment comes with its own risk, its own volatility. So beware of that before you invest in this segment. But if you have a longer term horizon, and especially in a country like India, where there are niche businesses, there are great opportunities as you scale from 3 to 5 trillion and then to 7 trillion, and there'll be many businesses which will probably become larger in size. But you need to be extremely good bottom-up stock picker. You will make mistakes, but mistakes should be smaller because in this segment, there's a very high probability of you ending up with stocks which can lead to loss of capital, permanent loss of capital.
All right, so a small cap category which one cannot miss, but then do remember to diversify properly in your portfolio. Thank you so much, Pankaj and Nirav, for being on the show and helping our viewers with this category. On that note, we'll take a quick break, and post that, let's get your portfolio question answered by Amit Joshi.